Meanwhile, Tesla reporting record deliveries in Q1 over the weekend at nearly 423,000 vehicles, but the news was not driving shares higher. You can see the move down more than 6%. In fact, they straight in reverse. As you can see, we talked to Dan Ives about this earlier. He is still very bullish, but overall, you have to question the momentum moving forward as they continue to cut prices.
Yeah, exactly. I think that's the big question here going forward, whether or not we are going to continue to see more price cuts. Dan Ives, it sounded like he was leaving the option open, at least at this point. Maybe we could see more price cuts here in the U.S., also over in China. Morgan Stanley, in a note out earlier today, also taking a similar view on this, saying that the price cuts were a huge catalyst here for these delivery numbers during the first quarter. And they also think more cuts may be in the cards here going forward. But again, the reaction on the street today, Tesla off just about 6%.
Well, as we just heard, Tesla stock responding very, very positively to a record-breaking quarter in terms of production and deliveries, down more than 6%. In this video, the finance media reacts to Tesla's record-breaking quarter, and I'll share a few comments and thoughts along the way. P.S. I'll be dropping a lot of exclusive content over on Patreon very soon, including a video on how to 10x your income in a decade or less. You can join Patreon with the card in the corner or the link at the pinned comment.
There's a lot of movement here, Andrew, because the estimates, for the most part, they were all over the place, as they usually are every quarter. Some were saying, hey, Tesla told analysts that the consensus was 422. FactSet came in at 432,000. However you view this, whether largely in line, slightly below, slightly above, here were the numbers in the first quarter, coming in at just over 422,000 vehicles, up 4% sequentially compared to the fourth quarter, up 36% compared to the first quarter of 2022. There's no doubt that the price cuts in China, as well as here in the U.S. during the first quarter, certainly impacted deliveries. It stoked the market, which is what Tesla was looking for, though Elon Musk himself has talked about whether or not there's a whole lot of price elasticity there in terms of its whether or not you can juice the market. The Q1 production came in at 440,000 vehicles. The focus now, Dan Ives at Wedbush summed it up perfectly over the weekend, saying the big question will be margins, as cutting prices will have an impact on this front. Although we believe automotive gross margins north of 20% remains the key threshold over the coming quarters. We'll find out if they hit that threshold. By the way, the consensus is for automotive gross margins, excluding the zero emission credits. That's important. Coming in at 20.5%.
Now keep in mind that I don't know anything about anything, but 20.5% seems a little bit low. We'll find out in a few days, so feel free to roast me if I'm wrong.
We get those numbers April 19th after the bell. I don't think we're going to see a ton of reaction on Tesla shares today, guys. These numbers generally in line with expectations. Certainly after the price cuts stoked the market, people expected them to be up around that 420 to 430 range.
Well, Phil's comments didn't age particularly well. Tesla stock ended up closing the day down more than 6%. Of course, personally not surprised. In fact, I was with family over the weekend having a conversation. I won't get into too much detail, but the long story short was, hey Stephen, I'm going to have some money to buy Tesla stock this week. And I said, well, there's a pretty good chance you'll get a discount on Monday after the stock sells off following the delivery results. Not surprised. I'm noticing a trend over time. Often, buy the rumor, sell the news. You'll see Tesla stock tend to trend up towards the number, a quarterly report, etc. And then unless the best result ever in the history of Tesla, the stock tends to sell off more often than not. Just calling it like I see it.
Tesla revealed Sunday deliveries shot up in the first quarter, representing a 36% increase from the year prior. And this comes after Tesla slashed prices across the globe just a few months ago, sparking a price war in EVs. And joining us now with the latest is Yahoo Finance's Praz Supermanian. Praz, the details, the numbers, please.
Yeah, Jared. So this is an all-time record for Tesla delivery-wise, 423,000 for the quarter, barely beating Bloomberg estimates of 421,000. Although they handily beat estimates from the production side, they produced 441,000 cars, estimates of 432. So strong numbers there. The price cuts are clearly working. The demand is being boosted there. But I think there's a little bit of concern here about the future, right? And, Tesla said they want to hit about 1.8 million vehicles delivered this year. Right now they're trending at about 1.6. Can they boost that up, meet that kind of mark, that 200,000 bogey there for the year? Giga Berlin hit 5,000 cars produced a week. Giga Austin, 4,000 cars. So they're kind of trending that in the right direction. In China, China, you have fewer disruptions like the lunar holiday and maybe lesser COVID infections. So there'll be some positives there, but the question is, do they got to cut more prices again? Do they got to do that again? And that's the concern. I think that's why we're seeing the stock not necessarily reacting that well today. If I can see that in the pre-market there, but we'll see. I think the issue is that its sentiment is the price cuts temporary or they're going to be needed again.
Spoiler alert, Tesla will continue to cut prices all decade on all of their products. You can count on it. How do I know this? It's in their fucking master plan. Step 1, reduce the cost to produce a compelling electric vehicle. Step 2, pass the cost saving on to consumers so more consumers can afford to purchase your compelling electric vehicle. Rinse, recycle, repeat. The real question, and thing that a lot of people are muddling up in their minds, is margins. Just because the prices are coming down does not mean that margins come down as well. As I mentioned, if Tesla reduces their cost to produce a vehicle, they can pass those cost savings on and maintain the same profit margins. And this is going to be the general overall trend. Now, there'll be temporary anomalies, there'll be ups and downs. Sometimes prices go up, sometimes down. Sometimes material costs will go up, sometimes down. Sometimes Tesla will have to pay expedited shipping for certain parts in a certain quarter. But overall, the trend will be down. Seems to be some unnecessary panic happening. Many Tesla investors right now seem to assume, I didn't realize that they would have to reduce their prices to keep selling more vehicles. These people obviously are unaware of Tesla's master plan. But the more important thing to understand is that Tesla can simultaneously be reducing the purchase prices on their vehicles and maintaining their profit margins if they keep driving their costs down, which they've been doing. And remember the whole Investor Day 2023, 50% reduction in the cost to produce a compelling electric vehicle. So yeah, Tesla will be cutting prices again and again and again and again and again. And every time they do, the bears are going, oh my God, look, the demand margins are collapsing. And then the quarterly results will come in and people go, wait a minute, how did the margins not collapse after they cut their prices? I don't understand. Because their costs came down and they passed those savings on. This is a roundabout way of saying I suspect that at some point, Wall Street's going to get a massive surprise when Tesla gross automotive margin is significantly higher than they were expecting despite price cuts and 2 factories ramping up.
Yeah, even as we're tracking shares pre-market, as we were mentioning a moment ago, they are down by about 2.8% right now for shares of TSLA. This comes as we did get some delivery numbers that came in from other electric vehicle manufacturers as well. And a larger question of if Tesla is doing this, of course, how does that impact their margins at the end of the day, too? But we've got this as many of the other auto manufacturers are ramping up their own delivery.
Absolutely spot on. Let's take, for example, Government Motors, who led and matter. Today, GM revealed that they sold 20,000 electric vehicles in Q1. 19,700 of those, the unprofitable Bolt. One more time. 20,000 of them, which GM does not make money selling. This is a mature product they should be making a shitload of money on by now, and they're still losing money on every Bolt sold. Awkward, but don't worry. They're new next generation electric vehicles. They're the real serious attempts. They're selling like hotcakes. As we can see here, the Lyriq sold 968. Oh, that's just 968. And the Hummer EV sold, that must be a typo. Surely they didn't just sell 2 Hummer EVs in the entire quarter. 2 Hummer EVs. Interesting. For some reason, I feel like one in the clock back, maybe 6 or so months, because I'm pretty sure Mary Barra had some misleading statements to investors that I called out at the time that I'd just like to revisit now that we have these amazing numbers.
Mary, let's shift to discussion of EVs. You've got the Hummer SUT that you say deliveries will begin this fall, and I think fall, when does that run through? The end of November, early December. So you're going to be having that come out very shortly, and then you've got 30 at least through 2025. You've already accelerated your plans in a number of areas. Can you accelerate them even more?
Well, it's very important, and I couldn't be more excited about the Hummer vehicle that's coming out. At our recent Investor Day, as investors got out of the vehicle, the smile on their face after experiencing watts to freedom was just incredible. So we will be delivering yet this fall. I was at the plant in just a couple weeks ago, and the vehicles look outstanding, so I can't wait to get them into customers' hands.
You did it, Mary. You got those Hummer EVs into 2 customers' hands.
Then we'll be launching the Lyriq, which is early next year. I think as we launch these 2 first products off of the Ultium platform, we're going to look to see how fast can we go.
6 months later, that's how fast they can go. 2 Hummer EVs delivered in the first 3 months of 2023. 968 Lyriqs. You did it, Mary. You misled. And it matters.
As you know, we've already taken almost half the time out of our vehicle development process because of the Ultium platform and the way it's designed. So, of course, we're going to be looking for ways to accelerate because we see the strong interest in our electric vehicles, but we're always going to put quality first.
Mary, when we talked with you, a couple of weeks ago at Investor Day, one of the goals that you guys stated emphatically was you will be the market leader in EVs. But right now, Tesla is at 63% market share. By 2025, some believe that you can catch Tesla. You guys are at, 9-10% right now in the U.S. Do you think that you can catch Tesla by 2025?
No, I don't, Phil. But I'm not going to say that out loud because I'm trying to mislead and deceive our dumbass investors.
That was weird. Now that I have your attention, watch very closely as Mary B. Esparra tells one story with her mouth and the actual story with her head by shaking her head while she's saying absolutely we can catch up.
Absolutely, Phil. When we look at the portfolio we have, not only the Hummer and the Lyriq, but Mark Royce talked about that we're going to have a Equinox-like size product that's going to be at around $30,000. We have the Silverado E coming, a GMC product after that. And again, all the other products that we haven't announced yet, I am very comfortable because when people get into these vehicles, they are just wowed. So we will be rolling them out, and we're going to just keep working until we have number one market share in EVs.
Sorry to be so direct, Mary, but you still have a lot of work to do. You can't make this shit up, bro. 2 Hummer EVs. Not even 1,000 Lyriqs. What a joke.
Rivian delivering 7,946 vehicles in their quarter, too.
Yeah, I'm not sure. I'm not sure if that's that's an estimate or if that's a real number. I haven't seen that yet. But
saying that they're on pace to meet their annual production.
Okay, yeah, sure. That's good, but I mean, they actually had to raise prices, right? Because they couldn't maintain that margin, like you mentioned.
Right.
Tesla's able to maintain those margins. We saw some numbers by Li Auto too. They're doing well there in China. But the big question is, can they actually keep growing, but also grow profitably without having to engage in a deep price war, which seems to be happening right now in China, and possibly going to happen here soon.
All right, shares of Tesla trading down more than 6% today despite record deliveries in the first quarter of the year. That deliveries number coming in at nearly 423,000 vehicles, up 36% since last year. The EV maker releasing the numbers on Sunday. We'll get full Q1 results in about 2 weeks. For more on this, let's welcome in Dan Ives, Wedbush Managing Director and Senior Equity Analyst. Also a Tesla bull. Dan, good to see you. You like these numbers. You were digging them, man. Why are investors not?
Yeah, look, I think it was just a knee-jerk reaction after a stock that's basically doubled, so far the first 3 months of the year. They beat what I'll call whisper numbers. Now I think maybe some might have been hoping for more of a beat given the price cuts. Now the debate will be margins going into April 19th. I believe margins, they held the line relative to how they guided. So I think overall, this is a major step in the right direction, a murky macro when you look at competitors.
Dan, what about the fact, though, that they did fall short of the pace that's needed to attain that goal that Musk laid out in terms of 50% annual growth? Is that still attainable?
But I mean, I think 50% was really something they took off the table on the last earnings. I mean, now, granted, the longer term 50% goal, but really the number that the street investors are focused on is 1.8 million. And I think if you look at that, they are on or actually ahead of that pace. And that's why right now, of course, there's a lot of bulls and bears in terms of that tug of war. Despite the stock doing what it's doing, I think the bulls ultimately won this battle.
But Dan, ultimately it comes down to this price action. I mean, we're talking about a market cap almost 3 times Toyota, $602 billion for Tesla, $231 billion for Toyota. Is that even near justified with the demand we're seeing for Tesla?
I actually can't tell if this is a serious point of inquiry. He's genuinely wondering what the answer to this question is, or just making conversation.
Look, and that's always the debate, right? I mean, if you look going back to Tesla Mini, they hated it at $5 billion. They despised it at $1 trillion and pulled the hair out at $600 billion. I mean, I just have always viewed it as a disruptive technology player and not a traditional auto player. That's why I view apples to oranges when you compare them just to the likes of a Toyota or others. I believe they deserve more of a disruptive tech multiple. And I think that's what you've seen happen to the stock, especially over the last few months. Now, with that said, they're held to a higher standard and they need to continue to produce. But I still think we're in the early innings of this green tidal wave playing out, a $5 trillion market in terms of EVs.
Dan, what about the price cuts? Clearly, they are helping sales right now. Now there's talk of further price cuts ahead. Do you buy that, given the fact, and put it in your own words, the murky macro picture right now?
Look, but they've had to ultimately rip the Band-Aid off. I think that was the smart poker move that Musk did earlier this year. It's a big reason why the stock's up. Now, of course, the debate will be, do they need to do more price cuts? I think in China, you'll see some more slight price cuts, potentially in the U.S. as well as the arms race plays out. But because of their margin structure, it gives them so much more flexibility than other vendors to do these price cuts. And I think that really continues to be the story here, especially as battery costs ultimately get reduced over the coming months and years.
This is a great point from Dan. He's talking about Tesla's insane pricing power. They are literally dictating terms in the entire automotive, not just electric vehicle industry. Outside of China, and even within China, there are almost no companies beside Tesla making any money selling electric vehicles on Earth. Period. Yet Tesla's making industry-leading profit margins, 2 to 3 times more profit per vehicle sold than a typical automotive manufacturer. Yet when we just look at EVs, no one's making any money on these things except Tesla. So companies are already trying to compete with Tesla on price, and in doing so, losing thousands, potentially tens of thousands of dollars per vehicle sold, just to compete on price. But obviously that's not sustainable. If Tesla decides to cut prices on their vehicles, the so-called competition either follows suit to continue selling vehicles at losses, but at least they're selling vehicles, or they don't follow suit, and then they don't sell vehicles. Tesla literally has their foot on the throat of their so-called competition. They've got them by the balls. Tesla is dictating the terms, the pricing of compelling electric vehicles globally. You can either match pricing and lose money doing so and hopefully drive your costs down enough that eventually at those prices you can actually make money, or you can just give up. Either way, it's probably going to end up in the same result. Tesla having won the decade.
All right, meanwhile, Rivian also has some numbers out. Deliveries down 7% in the quarter. That stock down a little more than 2%. What does this mean?
Look, I mean, Rivian's been a nightmare, right? I mean, because on one hand, you have a great story in terms of the production, in terms of what I view as an innovative vehicle, the Amazon partnership, but every quarter it's been dog ate the homework. The wind blew it over. I was late because of traffic. I mean, name an excuse. I think investors have gotten very, very frustrated. This is clearly a slight positive, but ultimately more wood to chop. They now need to execute to what I believe could be the power of the Rivian story.
So it turns out production is hard. Who'd have thought?
Yeah, Dan, lay out the bull case for me, because I think a lot of people are struggling really to see the growth opportunity and what Rivian's even going to look like a year from now.
I mean, the bull case is that they'll have enough capital to navigate this. They could raise more capital. If you look at the opportunity, if you call it 10, 15% of traditional pickup or even sport utility convert to EVs with where Rivian sits, you look over the coming years, there's a company that could be doing in the hundreds of thousands of vehicles rather than 40 or 50,000. As that plays out with eventually what will become a positive margin story, that's the holy grail. But look, I think as we've seen with Rivian, we've seen it with Farley and Ford, look at Lucid, easier said than done to actually produce and get these vehicles to customers' hands. And I think that's why Tesla continues to be their world. Everyone else is paying rent, with obviously others chasing them, GM included.
Credit where it's due to Dan catchphrase Ives. Still true, it is Tesla's world and everyone else is paying rent. And speaking of chasing after Tesla, just wanted to congratulate Government Motors on a stunning quarter. 2 Hummer EVs, I mean, my God, what a blowout quarter. Can't believe they managed to pull that off. 2 vehicles delivered in the entire quarter. I just don't know how they do this. Elon Musk and Tesla should be taking notes around production, logistics, and how to get vehicles to customers.
I got to ask you about Tesla only via Elon Musk, who's also running Twitter. And the big story is this blue check. I know this is not a public company anymore, but Dives Tech is everyone's favorite Twitter account. Are you going to pay this $9 a month to maintain your blue check? Is he doing anything right to inspire confidence that a Twitter turnaround is coming?
Maybe I'm the rare exception to the rule, but my experience on Twitter has improved significantly since Elon took ownership. Lots of little things here and there, lots of low-hanging fruit, like putting view counts directly on tweets, more transparency. It's wonderful to see community notes appearing everywhere that, let's say, the misleading, corrupt president of the United States says something that is false to the American public. When fake news is published by outlets, community notes is quick to point that out. And amazingly, people are actually now able to freely share their thoughts, opinions, and ideas without fear of being suspended, demoted, shadow banned, perma-banned, or variations thereof. This question has a built-in supposition that Twitter hasn't improved so far. In my own experience, it's improved a lot.
Yeah, look, David, great question. I think the big thing is, and of course, Briggs, one of my favorite Twitter follows as well, especially with NCAA. But look, it comes down to, I believe this is something where that overhang is starting to dissipate. You're starting to now see more of a break-even Twitter business. It's going to be an uphill battle to monetize, right? If you got into an Italian restaurant the last 20 years, bread's free. Now they tell you bread's $4. It's going to be tough to monetize that. So this is going to be a bit of an uphill battle, and it always has been with Twitter, with for paying $44 billion for something that I believe is worth closer to 15 to 20 billion.
I mean, he ain't wrong. Elon probably paid double what Twitter was worth, but this was a massive act of philanthropy, despite what many in the fake news claim. It needed to happen. There were few others, if any, able and willing to do so. Elon's like, well, f*** it. I don't have a choice, do I? So, literally nothing in today's video has surprised me at all. Tesla crushed it again, record production, record deliveries. What a surprise. Government Motors continues to live up to Mary B.S. Barra's false and misleading claims to her dumbass investors. I mean, I just still can't believe they managed to deliver a whopping 2 Hummer EVs in the entire quarter and almost 1,000 Cadillac Lyrics. You did it, Mary. Turns out, whether you're a new EV startup or a legacy automotive manufacturer, aka the competition, production is hard. I definitely prefer to be a company already producing extremely compelling, highly profitable electric vehicles at scale, as opposed to a company who hope in the future to maybe, possibly, be producing compelling, profitable electric vehicles at scale. But that's just me. I think it's safe to say that other than Tesla, just about every automotive manufacturer on planet Earth desperately requires a little more pep in their step. Unless they'd rather just go bankrupt, in which case, never mind. And if you could do with a little more pep in your step, may I suggest Athletic Greens AG1. I swear by this stuff. I've now been taking it for 2 years and I've never felt better. Like Tesla, I'm all about endless optimization. Whether it's my workflow, my energy levels, my sleep, my mood, my cognition, I'm always trying to get an edge. And Athletic Greens AG1 provides far and away the biggest bang for buck. It's a simple habit, 1 scoop once a day, every day. It's that simple. Here's a testimonial I recently received on Patreon. Hey Stephen, love your channel. I subscribed to AG1 several months ago. I wear an Apple Watch 24/7 and use an app called Training Today. It gives me a readiness score on a scale from 1 to 10, where 1 means take it really easy during workouts and 10 means I'm at peak performance. Before taking AG1, during a typical week of swimming workouts, I averaged a readiness score of about 5, but sometimes it dipped down to 1, 2 or 3. And then when I recovered, it increased to 8, 9 or 10. During the first week of taking AG1, my readiness score immediately went to 10 and stayed there for 5 days. I was blown away. I'm a big believer in AG1. So what could possibly be happening here? Well, amazingly, when you give your body everything it needs to feel, perform, and recover its best, it'll feel, perform, and recover its best. Athletic Greens AG1 is a great way to fill in nutritional gaps and give your body just about everything it needs for peak performance. And I do speak from personal experience. It's packed full of 75 high-quality vitamins, minerals, and whole food source nutrients. It also has prebiotics, probiotics, digestive enzymes, and adaptogens to help handle stress. It promotes gut health, boosts immunity, and meaningfully increases energy, at least in my own experience. I too have noticed an increased capacity for exercise and, more importantly, an increased ability to recover from said exercise. If you head to athleticgreens.com/SMR or use the link in the pinned comment, you get a 1-year free supply of vitamin D3 and K2. You can start your daily health habit now. With a 90-day money-back guarantee, and endless testimonials from reels of this channel day after day saying it's improved their energy, their mood, their desire, their drive, their libido, their cognition, motivation. There's absolutely no excuse for not at least giving it a try. So, you know what to do. Head to athleticgreens.com/SMR or click the link in the pinned comment. Take advantage of the offer. Let me know how you're feeling in a few weeks' time. And don't forget, plenty of exclusive content still dropping over on Patreon, well in excess of 300 exclusive videos, plus optional access to my Tesla valuation model and loads more. You can join Patreon with the card in the corner or the link in the pinned comment, and I'll see you over there. Love ya.